V is looking at Tesla for a bull, Tesla bull. So Tesla is not a bull to me unless we have a nice little thin zone here. I would have to see Tesla at 128.39 above that, and I know we're a few points away from that. It just, you have this big volume bar here. This is your resistance. I would not be long it as a volume profile trader unless we get above that, because then there's a very nice bullish zone to get into with a nice upside target of about 149. So I'd rather wait for that risk than get into it now. And then we gotta look at the QQQ major. I was lurking in the trade the close room this morning, and I saw that Solid Jello. Big shout out to our boy Solid Jello from the Warlocks World. Jumped into the trade the close room. We were closed this week, last week. Jumped into the trade the close room. Gave the members an amazing bombshell bull call. Nice call in the QQQ, even ahead of that, looking for a rally, and the members made money on that, and I know the Warlocks World did as well. So that was really awesome, guys, who got in that. I just want to make sure, Solid, I saw you, and we love you, man. Thank you for jumping in there and giving us that bonus trade on Friday. We're gonna bring on CJ. Oh, by the way, and I want to bring on CJ because I just want to point out something in the QQQ. So your first technical resistance is 266.46 in QQQ. We are above that now. There is a little bit of a thin zone here, as we were covering last week. The volume profile did shift lower. That is bearish, but it's bittersweet because it can be a short-term bullish since we have some new support areas here. According to this, we should be hitting the most 270.31, and it looks like QQQ is getting ready to eject out to the price. So we're looking for another leg lower here, a rejection in QQQ. So I'm following those levels. I'm going to bring on CJ. I want to see what the Bollinger Bands and the volatility bands are saying. Or CJ, if you have any other comments on Tesla going higher and CAT going higher.
You know what? First of all, cubes, let's take it. 270 is where I see some resistance here. I could see a little bit of a kiss of 270 even this morning. Lots of options that have built up at that level. There's nothing in the way of the Bollinger Bands. You don't hit any technicals until you get up to 275, 276. And that's where the newly formed, what I call a flesh wound cross. So in other words, it's not a death cross. It's not as bad, but the 20-day just crossed below the 50-day, which tells you that momentum is building to the downside on the cube. So that's the next level, but really it is 270. What were the other two you wanted to look at? One was Lee, right?
No, Lee was Lee. Well, we can look at Lee. That I was looking at that as a previous chart, but we could look at Lee. I was looking at more CAT to the upside. Rob V calling for Tesla as a bull. I just don't see it until we really need to get over that volume bar. But if you have something on Lee or anything, go for it.
Tesla's numbers this morning, or last night, they came in last night on deliveries, were lighter than expected. So the stock, 118, 170 is where it's trading right now. Last week, we were looking at 125 to be the top for Tesla after this little relief rally. I think that's exactly what you get. Right now, I got to look at 118. If we close a little lower today, this is going to pick up that trend to the downside. And my next target was 100 for Tesla. I can't believe I'm saying that, but yeah, I think that could happen in the next week or so. And then
I'm with you on
that. Go ahead.
Yeah, I'm with you on that, CJ.
Yeah. Caterpillar, different story here, Vaz. This Caterpillar could actually continue. We know industrials have been falling in favor for everyone. You've got China that's trying to come back online. And whenever China does anything that says they're going to have some sort of economic growth or try to reverse a trend the way they are, Caterpillar always wakes up because they are truly that international company. Now, you always have to look at the chart of the dollar, UUP, when you look at Caterpillar, because they are affected by bringing all those dollars home. The dollar has been coming down, which helps to give them a little bit of a tailwind. And interestingly enough, you don't have many stocks that have a tight Bollinger Band right now. It is tight with the 50-day coming higher. If we break up above this 240, I think you see somewhere around a 250 on the stock. It'll lead a rally higher right now if we get it in the market.
Okay. All right. I see that with the volume profile as well. So we're liking cat as a bull here.
Yep.
And that request was brought to you by May. All right, May, we are liking cat to the upside. Nice call there. And you know what, CJ, that was really interesting how you were looking at the UUP in fashion with cat. And let's just kind of go
Right.
over, getting to the minds of traders and the overall market sentiment right now, right? Because we have these global factors, and it does affect the stock market, right? We have to take we have to take and control those counterparts. So where are traders' minds right now, CJ? We're heading into a new year, new possibilities, maybe a recession, depending on who you ask. Do you think traders are more optimistic right now?
No, I think traders are confused for the first time in a long time. You've got a year where everybody was clamoring for a Santa Claus rally as we headed into December. I mean, there's that hope in that trade right there. Voz, remember how many we heard it here, not only here, but on television, in print. Everybody was looking for that Santa Claus rally, as if that were the last thing they needed just to restore some faith in the market. And of course, we didn't get that. We got a little bit of strength, on the last day. Big whoop. For anybody outside of Kenny or somebody again that's moving quickly with the market, that doesn't mean a hill of beans when you just notched your worst year since 2008, which is the last time where everybody felt really confused. Remember what happened in 2009? We crossed the calendar, right? 2009, January to March was just hell for the market. You had financial companies, obviously, that were crumbling at that point. I don't think we go through that, but it's going to be an exercise in confusion for a lot of traders out there right now. It's become in vogue to basically say, well, yeah, I think the market's going to be bearish for the first 6 months and then bullish for the next 6 months after that. I think that's underestimating the volatility that we're going to see here over the next 3 months, and especially watch this earnings season. This is going to, if you watch it closely, it's going to take a lot of the confusion out of the market because this is the quarter where I think a lot of companies are really going to tell us what's going on and really put things out there. They're going to be very transparent
Hmm.
because in 2008, 2009, they were not, and they got raked over the coals for it. So the state of the investor and the trader is very confused. I'd watch for a little bit of a suckers rally here for the next couple days, but I think the trend knocks that out and we continue
Yeah.
lower.
So you do see a little bit of bullish action possibly right now, but we still are in that bear. The bear still
Yeah,
has the grip here. CJ,
yeah,
this is just a quick question before we get into shift into
sure.
hyperdrive. Do you see a possibility? We did look at that 270 as a resistance there, if it even gets
Mhm.
there in the QQQ. Do you see a possibility we can end in the red today?
Yeah, I do. Well, of course, there's a 50-50 chance you're going to do it every day, Vaz. But you know what?
But you know
Kenny
what I mean.
said something that I thought was really interesting. He said that we're up more than 0.5% ahead of the open, and he indicated that he'd rather see us start in the red a little bit. Get a little bit
Yeah.
of runway going so that the market can get that momentum. Whenever you see days like this where we open really pop higher, all of a sudden that smarter money starts to come in and sell into that, and that is that thing that just gut wrencher for the people who are buying, trying to get this thing higher. They go, I can't even get it going for the first day. We can't celebrate. So watch that. I think it was very interesting that Kenny mentioned it. Watch for any follow through. It's going to come down to either strong follow through on a nice open like this, or if we start to see it bleed lower, you'll see a little bounce and retest that break even. And if we go red, people are going to go, ah, crap. We changed years, but still the same market.